In this video, I'm going to be breaking down the best investments made at each age group, how you can make them yourselves, and what I've been doing so far in my current age group. We're going to be talking about all of these investments and how they correlate to a better life and more financial freedom. Make sure to watch to the very end of this video so you don't miss any of the investments I'm going to be talking about today. But other than that, let's get right into it. So let's begin with when you're young. Now, typically here in America, you can start investing at age 18, but if you want to invest at a lower age than that, you're going to need what's called a custodial account. A custodial account basically gives you access to the stock market with parental supervision. They allow you to trade stocks, ETFs, and a variety of different assets under the supervision of your parents. Now, that's just the stock market, of course, but most investments you need to be 18 years or older to sign for to begin with. But let's just start from the range of about 18 to 21. At this time, you're still extremely young. You probably have a part-time job, not a full-time job, and you're probably still going to school. At this age, I honestly recommend going as risky as possible. I know that may seem a little bit counterintuitive to what you may have heard on the internet otherwise, but I really do think that when you're young, you have the ability to take the risks that you want to take. I think from 18 to 21, it's important to just get out there and experience a variety of different things. It's important to understand which investments you think will work best for you, whether that's the stock market, real estate, cryptocurrency, or a variety of others. I think 18 to 21 should be all about just trying different investment techniques, trying different things, seeing what works good for you, what doesn't work good for you, and figuring out what suits you best. Once you've reached the age of 21, in my mind, you are now officially in your 20s, even though 20 was of course a year before, but I think 21 is really the year that solidifies it. From the age of 21 to 30, that is when I think you can really start going hard with your investing. You can set up a retirement account and start contributing to that. You can start trading stocks more actively if you feel like doing that. You can also start investing in cryptocurrency if you want. You could even start investing in properties at this age if you have the money for it, but again, a lot of people unfortunately don't have enough even for a down payment at this stage, so I won't recommend that. From 21 to 30, a lot of it is going to be accumulating wealth. This is where you're building either a business, finding an ideal job position that has a great income source, and also investing all of the extra money that you have left over after expenses, necessities, and essentials every single month. By doing this, you're not only going to be building your nest egg, but you're also building war chests of cash that you can use at your disposal for a variety of different things. Cash really is king, and of course, inflation does eat into it, but I think it's important to be relatively liquid during this time because there's going to be a lot of opportunities that are going to be thrown your way. When you're young and you're freshly out of college at about probably 22 to 23, you're going to be experiencing quite a few opportunities. You're going to be meeting a lot of different people. When you meet these people, you're going to be able to see a lot of different opportunities that you guys can take. You're going to meet people at your job who know somebody else, who knows somebody who can get you a job at a different place with a higher income. Again, I think 21 to 30 is not only a big place for building up a war chest of cash and also a little bit into your nest egg, but also meeting people and being socially active. It is so important to be socially active during this time, to talk to people, to make relationships, to network, because doing this is not only going to lead to obviously you making more income, it's also going to lead to more connections that could increase your income drastically in the future. This is what I believe, and this is what I'm of course doing right now, is just building as much cash as I can, contributing a little bit here and there to my different investments, and also of course networking. Now, once you've reached about the age of 30, ideally you have a really great network buildup of amazing people who are not only going to be helpful to you, but you're helpful to them. It's a great give and take relationship that you guys have hopefully built together. You're also ideally going to have your war chest with a lot of cash built up as well, of course contributing to your investments. Also, if that war chest actually did pan out and you did end up emptying it in order to capitalize off an opportunity in your early 20s, like starting a new business or going in on a certain venture with somebody, well, hopefully that worked out and congratulations. If it didn't, hopefully you're just building it back up and climbing back. But otherwise, if you're here and you haven't used up all the cash reserves and everything, I think this is when you can still maintain a lot of risk. From about 30 to I would say 45, this is still, once again, you can maintain a lot of risk, but I think now you can start to get into the more of the interesting parts of investing that a lot of people don't talk about. I think a lot of 30 to 45-year-olds get really into real estate. Of course, this is a bit riskier than more traditional investments in the stock market, but of course there are a lot higher returns. You also need to have in general more capital in order to put into some of these properties, and ideally if you have a large savings of cash, you can use that to funnel into down payments on different houses, properties, duplexes, rental properties, apartment complexes, whatever you might want to invest in. By doing this, you're not only able to build possible cash flowing assets, you're also going to be able to do things like Airbnb with certain properties that you buy. You're also going to be able to fix and flip certain things that you buy. There's a variety of different things that you can do in the real estate market, and I think that's why most people, when they get older, want to get into it. There's a lot of money to be made in that sector, and as long as you have the money to get into these properties in the first place, it's usually honestly not too difficult to do. I also want to mention too real quick that of course you are still contributing to your nest egg, being your retirement accounts and any stocks that you have in your portfolio, but otherwise I think a lot of this is going to have to do with a lot more active cash flow building. Ideally by this time you either have a job that pays a really good income source, a business that you've built or that you're working on that ideally is cash flowing relatively positively or doing very well, and overall you're just trying to push further and create more and more wealth for yourself and your future family. I would say by this time a lot of you will probably have entire relationships, you'll be married to people, you might even have kids. So of course that is something to take into account because of course that does eat into a lot of your income, but of course if you can save right and spend right, you can manage to still do all of this relatively easily. Now, once you've reached 45, you're going to get a little bit closer to retirement age. Ideally, you have a lot of money built up in your nest egg by now. You have investments in a variety of different sectors that you've made. Hopefully, you have a great job that has a great income source that you've been able to either move up the ranks in, or you have a business that is doing very, very well for you and is slowly but surely, growing and still in a positive direction. Ideally, this is the time where we're going to figure out, okay, what am I going to do now that I've reached 45 and I have 50 coming very soon, and then 60 and then even 70. Ideally, most people retire by 59 and a half to 60 years old, and if you have enough money saved up in your nest egg, well, then you're looking good. I would say 45 to about 60 is going to be just kind of your last little hoorah. This is where it gets kind of fun though. A lot of it really, you should have most of the things built up by then. A lot of this is obviously in real estate, stocks, cryptocurrency, whatever it might be. Your retirement account ideally should be growing very steadily and has been doing very well, hopefully over the past couple of years and decades. Your stock portfolio should be doing very well. Your crypto should ideally be doing well, but who knows with crypto? Of course, crypto is risky. And you might even have some cash flowing assets that you bought in either your late 20s or early 30s. But by now, a lot of this is going to have to do with some meaning of life stuff. So this is where it's going to get a little bit deeper and a little bit more philosophical. You see, most people think that they have to, of course, work their whole lives. They think that they have to work till they're about 60 or even later than 60, and then unfortunately they retire, but they're too old to do anything in the first place, and then they just kind of die. I really, really do not like this sentiment, and I really think that it's further from the truth. I think you can retire early. I think you can save up enough money to where you can retire even younger than the ages that we're talking about right now. But I think overall, even if you're at these ages, I think it's so important to have interests, to have hobbies, to have things that keep you busy even after you become financially free and eventually live your life and do what you want to do. Because ideally, nobody wants to work for the rest of their lives, unless it's something you really enjoy, which in that case, it's great. If you've built a business that you have a lot of passion for and you actually enjoy running every single day, which is something that I'm doing right now, I'm planning to do this until my wheels fall off. And then once you retire, like I said, it's very, very important that you find interests, you find hobbies, you find things that you're good at or things that you like doing consistently, and you keep doing those things. Because a lot of people retire with a lot of money, they spend a little bit of the money and then they get bored. It is so important to stay passionate about things, and it is so important to find things that not only keep you busy, but also make you happy at the end of the day. But overall, guys, that is pretty much all of the investments that I can think of. It's a relatively simple system when you really think about it. The main investment categories that I personally believe in as far as stocks, crypto, and real estate go are really, I think, the tools that you can use to obtain major generational wealth over the next decades and even years. I hope I've earned your thumbs up today, guys. Please like the video. Please subscribe to. We talk about stocks, cryptocurrency, real estate, and a variety of different things with a $sign attached. So if that sounds like something that's interesting to you guys, make sure to hit the subscribe button. If you guys want to pick up some free stocks with WeBull, check out our link in the description below. When you guys sign up and deposit $5, you can get 2 free stocks worth up to a lot of money. So if that sounds like something that's interesting to you guys, check out the link in the description below. But other than that, guys, that is all I have for you guys today. I'm Kyle of Finance Bro. Take it easy.